Let me welcome on board Devina Mehra, someone who's been tracking HDFC Bank since 1996. Devina, hi, morning. And I'm just looking at one of your first reports that you published on HDFC Bank. If we can just bring it up on the screen. So our viewers will know what we're talking about exactly, where the buy report said that at 1 he's good, at 5 he'll be awesome. From the baby, it was a teen with a six-pack ab. Devina, what's your sense then at 29 years? What's this teen with a six-pack ab going to look like? Is the opportunity still as large for shareholders?
Yeah, it's not the teen with the six-pack ab. It's Arnold Schwarzenegger, who was the reigning world champion then.
I couldn't tell.
So that was the thing, that it is at 1, it's a baby. At 5, it will be Arnold Schwarzenegger, the world champion. So as you were looking at just now, that it is now, if you look at even on a global scale, it is a huge bank. You were just mentioning 4th largest in the world in market cap. So that, that was just 1 year out of IPO. And this report, of course, is relatively well known. And one of the reasons why I made that call at that time, of course, there was this whole fundamental thing that PSU banks had a large market share, and therefore there was a good case to be made that a well-run private bank will take away some share. HDFC itself was already a brand name even for the retail consumer, and their deposits and debentures, etc., used to do well. So they were already a known name. So that was another advantage. But I always say that this call had a plus factor, because in banking, ultimately you are banking on the people, because banking is a business where if the credits go wrong, there are always negative surprises. So in this case, because a lot of the people who set up HDFC Bank were my ex-colleagues from Citibank, right from Aditya to a lot of his team, I was quite positive that they would manage the risk tightly, which, as they showed in subsequent years, they did. But this report is well known. What is not so well known is just a couple of years after that, we actually had a dramatically opposite view on HDFC. And let me just give you a bit of background of HDFC. In 93, 94, when the Indian market was open to FIIs, HDFC was the #1 FII stock. People just loved it. Obviously, well-run business, very articulate management who could talk numbers, which was a rarity at that time. And so every time the FII limit regulatorily was increased, HDFC was the first stock to go limit on whatever was the limit at that time for FIIs. FIIs would just jump in and buy. And ours was the first negative view on HDFC in the late 90s, I think 98 or 99. We did a piece. And the reason was nothing to do with the business really, but because there was this much demand for the stock, they were raising equity practically every year. What now are called QIP. The term QIP was not there, but essentially that they were doing a lot of institutional equity placements at the time. And at that time, again, the managements in India were maturing. People were primarily focused on profits, earnings growth. Nobody was really focused on the balance sheet side. And we said that this is a company which is seeing a decline in return on equity every year. And this stock cannot perform. And people were like shocked. They said, this is the most loved FII stock, and how can you say that it won't perform? But actually, thereafter, for 5 years, HDFC did nothing. It was a time correction. It did not crack and go down. But 5 years when the market was going up, it didn't go up. So we've been on both sides, you can say, of this trade, even in the 90s.
You sure have been. But from the 90s to now, Devina, that it's a combined entity, one of the largest in the world. What lies ahead? What are the next 10 or 20 years going to look like?
Difficult to say. I mean, actually, that what 20 years or 10 years look like. But I mean, it's a reasonable start for one thing. I mean, in most mergers, you are thinking about how the two cultures would mesh, or how whether they'd be able to make it work, and what are the potential glitches. I mean, a lot of those concerns are much less in these two entities, because they have been, in a sense, of parent-child, and when the child became bigger for a very long time. And also, Mr. Deepak Parekh has retired, so I doubt whether there will be a big conflict in terms of the management side also. So, all those things are taken care of. So therefore, you can make a case that the synergies would come through in terms of cross-selling, in terms of accessing each other's consumers. And really the logic for being in an NBFC structure no longer held once all the regulatory changes have come about, which have made NBFCs also not as much as banks, but fairly tightly regulated.
All right, Devina, thanks for joining in. Now, I wanted to also talk a little bit about the kind of growth projections, because HDFC Bank, it needs to grow at about a 20%, or it wishes rather to grow at a 20% deposit base. In the current environment, do you think that it can consistently grow deposits in a big way?
It should be able to grow higher than the market, because, as I said, at least in the beginning, there will be some synergistic benefits of tying up with HDFC, because they're in terms of branches, in terms of consumers, that it is not 100% overlap in terms of where the branches are and what consumers they have. So, I mean, for now, I think it would give a boost. And obviously, for HDFC, it would bring down their funding cost, which has been, as with all NBFCs, higher than that of banks.
Okay. Just wanted to understand from you what some of the hiccups you believe there could be, given that, for instance, HDFC has been a very differentiated institution. Do you think that could emerge as a stumbling block?
I think merger will go through smoothly. I don't expect a big stumbling block in the merger. Obviously, some of HDFC Bank's ratios will get diluted, at least in the short term, whether it is the return ratios and or even the growth percentage. That would probably come down from where it has been with the merger of HDFC. And that I think the market already understands. So that, I mean, other than that, I don't see any big glitches coming up, at least from what is visible.
But what about flows, Devina? I mean, flows are a function of different parameters altogether, right? And I ask you this because this was one of the key parameters when you came out with those reports on HDFC Bank back in the day. Do you believe that the worst in terms of flows and all the MSCI, etc., adjustments are behind for the combined entity of HDFC Bank?
In fact, it was the reverse. As I told you, in terms of anyone betting on flows would have said that HDFC will never underperform, because all the FIs absolutely loved it. Domestic mutual funds did not really exist in any meaningful form then. So you would say that the money is coming in, so how can the stock not perform? So I have never been a believer in flows. And if you look at even on an aggregate basis, from 1994 practically is when the FIIs started coming into India. And this is like a fresh slew of money, billions of dollars coming in. And 94 to 2003 is the only 9-year period in the Indian equity markets with a zero return. So just money coming in doesn't drive up the market. Sounds, strange, but if you look at the correlation, it doesn't work that way. So that is not something I even track anymore. FIIs closed this month, so on. I don't even track, because we tracked it a long time and seen that there is no causation or correlation with the market movement.
Oh, yeah, absolutely. I get that point. Many say that, Devina, or, at least there are a few critics out there who believe that HDFC Bank wouldn't quite be able to catch up with the times. banking of the future will be based on technology, right? Besides, of course, many other parameters. And technology or going digital is one thing that HDFC Bank has sort of, hiccuped on.
Yes, they have. I mean, you just see their, all the consumer complaints floating around everywhere. But I mean, I don't think this is going to be a permanent state of affairs. As I said, that it is a smart management. So yes, I mean, sometimes you don't do things in time, but it is likely that you will never do it. I mean, I doubt whether HDFC will be in that situation where it will never get its act together on technology, because given that it is so critical. I don't know exactly what they are doing. I mean, in the sense that I haven't met the management of late or anything, but I'm sure, that would not be a permanent stumbling block.
Right. Devina, the other thing which you also briefly alluded to is, leadership. For instance, HDFC Limited's leadership has largely not participated in HDFC Bank at all. Do you think that at some point could become a challenge? Although it's a very seasoned top brass, but regardless.
I don't think so, because I mean, I'm sure all these things have been thought of, and many of the old time HDFC management also is HDFC Limited management is now at a stage when they would be retiring, not that that much later. So I think that transition can be managed. And I'm sure, all this would have been thought through in the merger itself, because they are the guys negotiating the merger, in a sense.
Yeah, absolutely. Devina, great to have you on the show. Thanks as always for joining in with that opinion from someone who was a believer back in the day itself in HDFC Bank to after the